Hey everybody, it's John King with Summit Funding. It is Friday, December the 2nd, and we have a lot of mortgage related news. But before I get to that, I have some personal events that I want to invite you to. So for anybody and everybody that knows me and you're within driving distance of the Roseville area, I want to invite you to come take pictures with Santa and me on Saturday, the 10th of December. It is going to be from 10 to 1 at my Roseville office. So you can go to santa.johnloanking.com to register to RSVP so we know you're coming. Go to santa.johnloanking.com to register and join me for free pictures with Santa. Bring your family Saturday the 10th from 10 until 1. That's the first thing. The second thing is if you are a business owner and you run your own business basically, and you are within driving distance of the Sacramento area, I'm hosting an event on Thursday the 8th. It's from 1 until 2:30. This one, I'm actually going to want you to just reach out to me via email, call my office. We'll get you registered for it. It's about business planning for 2023 and ways to set your business up for success in the coming year. So if you're a business owner or you're a high-level manager that runs a team and you're within driving distance of the Sacramento area, join me. I'll buy you lunch. It is going to be in Sacramento. It is going to be on on Thursday the 8th. From 1 to 2:30. Looking forward to seeing you there. And now we're going to pan to my presentation about what's going on in the market. All right. Thank you so much for listening to me talk about my upcoming events. I hope that you can make it. Please make sure to RSVP. But let's talk about the markets. So it is really, really crazy right now. We had a very, very busy week of data, and we had a huge shift on Wednesday with interest rates. And I'm going to show you right now on my screen exactly what I'm talking about. So what you're going to see right here is you're going to see, and actually I should probably zoom way in here. So this is starting November 1st right here. And we saw interest rates drop significantly, like from 7.25 down to 6.6 on average. And that happened on average. Be careful about the on average piece of interest rates. But we saw a significant drop. That was because the inflation report came out and it showed a huge drop in the inflation rate. And I think that that really is showing that inflation is starting to come under control. And I'll explain to you some more of the details about that. We've stayed along pretty steady until Wednesday of this week. And then we had another huge drop. What happened now? Right now, again, average interest rates about 6.3%. Again, be careful when I talk about average interest rate, because that doesn't mean that's exactly the rate that you're going to get. That just means when you look at all the different loan programs that are out there, and are you buying down your rate or are you not? Are you doing a 15-year loan or not? Lots of different scenarios, great credit, big down payment, bad credit, small down payment. That's kind of the average of what they run. Okay, some people are going to be higher, some people are going to be lower. But here's the deal. What happened on Wednesday is Chairman of the Federal Reserve, Jerome Powell, had a speech at the Brookings Institute. He talked about a lot of things, and I'm going to share some of those things he talked about. But the most important thing that he ended up saying was at the end of the speech, he said, look, I think we're ready to start slowing down the increase in interest rates that we have been putting out as the Federal Reserve. What we've seen since June is every time that they've met, they've raised rates by 0.75%. Well, they projected last month that when they meet in December, they're probably going to raise rates only by 0.5%. But what was most important is that he came out and said, we're likely to start decreasing that even further. He had talked for 15 minutes, and it was the one thing he said at the end that the markets reacted to, and interest rates dropped significantly. Then we fast forward to this morning, and we get the payroll report. First Friday of every single month, we get the payroll report, and that was a big one this morning because the payroll report is really talking about how many jobs were created in the last month. And this month, it was critical talking about wage inflation, because that was one of the things that Powell talked a lot about. And I'm actually going to pull up this chart here to show you some of the things that he was talking about. So first of all, he's really pushing on the fact that, hey, we're not out of the woods on inflation. We've seen inflation climb, and it's been bouncing back and forth for the last few months, but it is starting to come down. So that's a really good thing. But what he really broke down was that there's 3 parts to inflation. And the 3 parts to inflation are core goods. Those are things you're buying. That's the TV that you're buying and the video games that you're buying for the kids, the things that you buy. Well, that's the red line, and that's the line that took off the fastest and went the highest. So most of the inflation we've been seeing is because of goods inflation. And the federal government is raising interest rates so that you don't just go buy goods, buy cars at super cheap rates, because if it's 0% to buy a car, who cares? I'll buy it. If it's going to cost you 10% interest to buy a car, you might think twice about it. And so they've done a good job of bringing the goods inflation down. The core services other than housing is the teal line. That one hasn't gone up as much, and it hasn't really, it's kind of stabilized a little bit. Housing is the one that they're talking about takes the longest to come down. Now, why does housing take the longest to come down? Because really what they're talking about is rents. The biggest component of the core housing services has to do with the cost of people renting, and rents have been going up significantly. When someone signs a lease, they sign it for a year, which means they don't get to renegotiate until a year later. What they're seeing right now is that rents are peaking and starting to come back down. But it takes a year for that to catch up. It takes a year for everybody to be able to renegotiate their lease. And the increase in rents is starting to moderate. So we're seeing that come down. But what he's most worried about, what Powell said he's most worried about is right here. And that is these core services other than housing. He said, look, that is everything else from haircuts to car washes to whatever you're doing. It's a service. And what he basically is saying is, look, we're worried about wages. We're worried about the fact that a lot of people are still changing jobs and getting more pay, which that's great that you're able to earn more pay. The problem is your employer has to be able to afford to pay you more. And for your employer to be able to pay you more, they have to charge more on the products and services they're selling, which will keep perpetuating inflation. And that's what happened this morning, was that the jobs report showed a lot of jobs being created, so there's still high demand for jobs, and it showed wage inflation. It showed that wages went up by 0.6% instead of 0.3% like they expected. Now, when you talk about across, millions of people working in the United States, that's a significant increase in wages that they're worried about. And so the market this morning tanked. We saw the stock market respond negatively. We saw mortgage rates skyrocket. Now, not skyrocket, but come back up some, lose some of the gains. The chart I showed you a minute ago doesn't show all of today's numbers in there yet because it's updated daily. But here's the good news. It's right now 12:30 on Friday the 2nd that I'm recording this, and we actually have gained back all of the losses from this morning. Why is that good news? First of all, because it's showing we're continuing a downward trend on interest rates. But you got to be careful about how good that good news is, because as rates continue to go down, more buyers are going to be willing to jump back into the market. We've seen almost a 1% decrease in interest rates over the last 30 days. Buyers are going to start jumping back into the market, especially in spring. Not many people want to buy during the holidays. So if you're thinking of buying a home, now is the time to get into escrow. Now is the time when you're not in competition with so many people, because we're already seeing interest rates drop and we're going to see people jump back into the market. I think we're likely to see a good number of people jumping back in the market in February and March. And so you've got to be cautious about waiting too long to jump back into the market, because you're going to be like everybody else. And now prices are going to start coming back up, because that is what caused housing prices to come down over the last 9 months, was this huge increase in interest rates. And as we see those interest rates starting to come back down, be clear, we're going to see volatility. We're going to see bumps back up again. We're going to see movement, a lot of movement, because there's, it's kind of, the market is trying to read the tea leaves, and every time that they see a new piece of data, they're reacting to it. They're saying, oh my gosh, that means the Fed's going to keep raising rates because inflation's out of control. Wait, no. That means the Fed's not going to raise rates because inflation's under control. The fact is that some data shows early and some data takes longer to reflect the fact that inflation is in fact coming under control. I firmly believe, from all the research I do, all the people I listen to, all the charts that I look at, that inflation is being solved, that it is under control. It doesn't mean prices are going back down on goods and services, but it means they're not going to be going up as much as they were. And that's all the market needs to hear. That's all the mortgage market needs to hear, is that the Fed is done with significant increases, and we're going to see mortgage rates start coming down. Hope that helps. The other thing I want to tell you is FHA mortgage limits, conventional mortgage limits have been released. So there'll be a link down below where you can see the information, but basically we're over $700,000 for a conventional loan, $726,000, I think, for a conventional loan. And we can lock the conventional loans now. FHA loans also released their limits. FHA, we can't lock those loans until January 1st. We can't start the loan until January 1st on FHA for next year's limits. But for conventional loans, we can do them now. If you have any questions about this or anything else, let me know. Looking forward to seeing you at the events next week, and make sure to RSVP. Talk to you soon. Bye-bye.